Hello and welcome to the market analysis post the South African budget speech. I am Nozi Pombanja. Now, we've seen the rand weakening against the greenback throughout the day, and the JSE All Share Index also closed in negative territory today. Joining me to take a closer look at the markets and the currency movements, I'm joined in the Johannesburg studio by Adrian Saville. He's a chief strategist at Citadel Asset Managers. Also joined by Frank Magwegwe. He's an executive at Momentum Retail, and Stephen Schultz, Investment and Savings Center of Excellence, this at MMI Holdings. Peter Attard-Montalto will join us from London in a few minutes to get his thoughts on the budget reaction from a foreign perspective. But before we do all of that, let's perhaps take a look at how the markets have done. And we start off with pulling up the JSE All Share, and we're seeing that we are at least almost 1% weaker today, sitting at 47,995. Negative reaction coming out from the markets. But perhaps we pull up the sectors and just have a sense of how the sectors pull that picture together. And it's a bloodbath across the board in terms of the negativity seeing come through there. The resources taking quite a hit and leading that negative downward trend we're seeing there. That's almost 3.5% weaker. That's the resource counters. The banks also continuing in that negative territory at 1% weaker. Financials almost doubling that loss that we're seeing on the front of the banks. That's almost at 2% in terms of the weakness coming through there. And the industrials fairly flat at 0.02%, but certainly in line with the negative momentum that we're seeing from the markets. Let's pull up the currency and let's see how the rand is holding up. And I suspect the only way to describe this is this has been an absolute bloodbath on the rand at 2.78% weaker, sitting at 1562. My colleague David Williams, who was with Tumi Shugreta a few minutes ago, indicating that at some point in their analysis they did see the rand going down to as much as 1566. So although we are seeing a bit of a pullback here, this is a negative story that is coming out of the currency and the local markets. Let's turn our focus to the analysis. Well, my guests have been introduced, and let me maybe get some opening comments and reactions from them in terms of how they have seen the budget. Frank, let's start off with you. Is it this a thumbs down or a thumbs up for you in terms of the budget for 2016?
Thumbs up for me. A few elements that I had in mind were touched on, but my overall sense is you can't shrink yourself to greatness. Where is the growth story? We look at the NDP, we talk 5% growth. I mean, we're nowhere near there. So for me, it's a thumbs down without a doubt.
So you're not seeing where the growth is coming from, and you're basically saying this is business and as usual in a business unusual environment. So you're not impressed by the outcome.
Yeah, well, the story of cutting, the story of a little bit of touch on the SOEs, the tightening of the belt. I think that's all good, but I don't think it's just going far enough.
Somebody described the story of cutting as cutting biscuits and consultants. They generally go together. Stephen, let's bring you in. What are you seeing? Are you seeing a thumbs up or thumbs down
so
scenario?
I must agree with Frank. So it was a very well thought out. It was a good speech from a tone perspective, but at the same time, I can't help but feel that I missed some of it. So I felt there was a little bit of detail lacking, and I can't help but feel that there's a crisis that's been wasted today.
A crisis that's been wasted, and they say that good politicians never let a crisis go to waste. Agreed. Again, I think you raise an important issue because there's a lot of political analyses that needs to go around this particular budget, and we'll get to that in a moment. Adrian, your immediate reaction, up or down?
There were two things that stand out to me. The one is a deliberate, concerted effort to provide reassurance, policy consistency. There was a deliberate reference to the NDP as being front and center in terms of policy. I think that's really important. And the second was the call to collaboration and partnership, that we can't do this alone. Having said that, this is words. This is a plan. This is not the action.
I actually want to stay on that point of the NDP, because the NDP was missing from the state of the nation, and it was almost as if there was a reflection at a political leadership level to say we actually missed something here, so let's use the first part of the speech to reposition and recenter the NDP.
What the revolving door fiasco did in December was it put incredible uncertainty around So who's in charge? What's the policy? Where do we stand philosophically, and so on? And putting the NDP front and center today, I think just underscores that this is the policy plan, and business can plan around that. They can put their investment decisions into that context.
And maybe a bit of an unfair question, Frank, because one would also think that the international community, the investment community following the budget are looking at more than just the budget. They're also looking in the credibility of the man himself, in Minister Pravin Gordhan. Do you think that he relayed the kind of confidence that investors are looking for?
I think from how he delivered the speech, definitely. And as Adrian says, that call to collaboration, that constant reference to, we know things are tight, but we're a resilient nation. We can get above it. I think, but that's all rhetoric for me. Ultimately, what an international investor is going to look at is it's implemented. What are you actually practically going to do to get your country to grow so that you reduce unemployment? Sadly, for me, that was missing.
I guess one of the big things going into this budget, Stephen, was, well, we need to protect this downgrade in terms of our investment grade, or potential downgrade into our investment grade for South Africa. Was this a good enough of an innings for South Africa to have that protection?
Yeah, so look, I think the elephant in the room was rating agencies.
Yeah.
So few would question the fact that it was rating agencies front and center today. And by that measure, rating agencies, rightly or wrongly, look beyond the rhetoric and they look to the hard numbers. And I just think the hard numbers were missing. There was a couple of things that were talked up and that the rating agencies and general public were looking for, and they were just absent today.
The numbers were missing. Let's see if Peter Attard-Montalto, who joins me now from London, agrees with that analysis. Peter, thank you for making the time to join us. We've just been saying here in Johannesburg that the ratings agencies and the investment community, no doubt having their eyes on the budget. Was this enough to make sure that South Africa stays away from a potential ratings downgrade?
Well, that's the key question. I think it's really interesting to actually think, what did National Treasury actually think was needed to avoid sub-investment grade? Because I think they didn't deliver it today. I mean, fiscal was very, very conservative, but then the rating agencies have been very clear that short-run fiscal is not what matters. What really matters is the microeconomic structural reforms that are going to boost medium-term growth. And we saw nothing on that today particularly. We saw appeals to NDP, which were the same as before. We saw lists of sort of infrastructure spending and things like that, which are not really helping the agencies onto a more positive footing. And so overall, it was pretty disappointing, I think. And it was very interesting to see the market reaction, particularly in bonds, considering the lack of growth measures coming through. That was really the driver at the end of the day.
Well, Peter, Stephen Schultz is here with me in Johannesburg. He's got a question for you. Stephen, please go ahead.
Peter, I was just wondering how closely the international community are watching the growth numbers that were put forward today. And I suppose an extension of that is whether you believe that those growth numbers, the projections, are credible.
Well, the growth numbers are the first hurdle for credibility of the budget, and broadly they were okay-ish. I mean, we had 0.9% growth penciled in for 2016. That's my growth forecast. It seems like they may be overestimating a tiny bit in the outer fiscal year. I mean, very sort of geekily, I think they're overestimating what they think the deflator for GDP is going to be until 2018-2019. That gives them a little bit of fiscal room. But very roughly, the growth numbers were really okay. And I think that's not really what we mean by looking at growth. We mean, where is potential growth in the long run? Is there still this speed limit to the economy around 3%? And that seemed to be the case from National Treasury's projections as well today. But also on the policy side, nothing really to boost our own projections in the medium run for potential growth either.
Peter, but this budget is also happening in an election year with the municipal elections looming large. Could we have expected anything different? Could Minister Pravin Gordhan actually really tabled anything bold given the political context?
Well, I think he could have. I think he could have had a few little tidbits of restructuring of state-owned enterprises, of some genuine privatization actually coming through, some real changes to labour laws, say, coming through. Instead, he was trumpeting the opposite, minimum wage, which Fitch in particular has highlighted as a very dangerous thing for the growth outlook in the country. And yeah, there wasn't that sense of a real shift in thinking about boosting growth going forwards. There were a lot of squirreled away expenditure cuts pushed down into the local government and into the provincial level, which weren't really detailed, but were within the thicket of the budget review, which are going to be difficult to deliver on, particularly these hiring freezes at the lower levels of government that we're going to have to watch very closely in this election year.
Peter, a quick comment on the approach to taxes. You issued a note on Monday saying that you were expecting higher taxes and quite a sharp pull down in terms of expenditure. How does today's developments tally against the note you put out on Monday?
Yeah, on the expenditure side, it was roughly as expected. There were no sort of massive headline, sort of cuts of we're not going to do this sort of expenditure or, anything like that, or cutting benefits. We didn't say anything like that. What we saw was this scattergun approach of expenditure cuts really pushed down into the line departments, provinces and municipalities. On the revenue side, there were a few surprises. We didn't see a VAT hike, and we thought they would politically be able to get away with that, actually, now that NHI is moving forwards, but clearly that wasn't the case. But things like the capital gains tax increase was expected, the fuel duty levies, things like that were also expected. But there was a little bit of reliance on, if you like, cheeky one-offs. We saw a 7 billion saving result of FX valuation changes of deposits at the SARB, which were used to sort of lower the issuance profile going forward. So it was roughly as expected, I think, in terms of the detail overall. And no wealth tax as well. I remember there was some speculation of that. We weren't expecting a wealth tax, and that wasn't delivered.
Peter Attard-Montalto joining us from Nomura International in London. Thank you for those insights. We bring the conversation back to Johannesburg. Adrian, I want to pick up on some of the points that Peter raised there. The state-owned enterprises, the potential review of SAA and SA Express. Really, I don't see how this is going to fundamentally change the challenges that SAA is faced with. In fact, I would go as far as saying maybe SA Express and Mango, if there was a case there. I don't see how this is addressing SAA and the problem that we have there.
Look, there was veiled privatization in this. You can dress it up and call it whatever you like. There was reference to sort of buried companies that spill over from 25 years ago, and that very much is the case. There's two issues with a state's balance sheet. The one is it's poorly structured, it's very inefficiently structured, and the second is there are large important parts of it that are poorly run. So when Minister Gordhan started this by making reference to a call for radical, bold structural change, we land up with fizzy drinks.
Yes.
So this is a big no vote. There's a no budget for fizzy drink for fizzy drink drinkers. But what we really need to see was where was this bold action?
Yeah.
And that's the place to start. If you've got this extraordinary balance sheet, and it is an asset-rich balance sheet, there are two easy levers to pull. The one is the financial engineering lever, which involves restructuring of the ownership, and the other is the operational lever.
Yeah.
Neither was pulled properly. Instead, it's fizzy drinkers that will pay.
Fizzy drinkers that will pay, but what about wealthy fizzy drinkers, Stephen? Because of
They're going to have to drink a lot of it.
He spoke about it, a budget that speaks to inclusivity and slowly began to introduce the idea that the wealthier will have to take on a greater tax burden.
Yes.
Did that actually happen?
Yeah, so I think it was always going to be politically difficult to get a VAT increase through, but one would argue now is probably the best time to do it. He's got the opportunity, and that's what I meant by a crisis wasted.
But not in a municipal election year.
Not in a municipal election year. And to be perfectly honest, this morning, had you asked me, I would have also suggested a 1% increase across all income bands, which was probably going to raise a useful 10 billion per year.
Well, welcome back to the South African Budget 2016. Still with me, my guests in the Johannesburg studio, Adrian Saville, Stephen Schultz, and Frank Magwegwe. Frank, I want to come back to who actually is walking away smiling at the end of this budget. If one reads between the lines, you think Labour in particular should be happy given the developments around the pension fund and the acknowledgement of moving towards a minimum wage agreement.
Absolutely. I think one just needs to pause and really look at the fact that in December, the president signed the bill, and retirement reform has been going on for over a decade. And the fact that, Kosatu Toy Toys and right on announcing budget, now we move it 2 years out. I think there's a bit of a message for me. So when you look at, the state of the nation and privatization, I was quite excited in saying some bold action is going to really come out, post office, SAA. But between the state of the nation address and now the budget, for me, what I'm just reading in between is really that, there's this, as Adrian says, you can't really go and say we're going full force privatization, because there are some cabinet ministers who are strongly opposed to privatization, and obviously labor. So, the example of SA Express and SA that we've been talking about, I think it just shows the fact that there is a lot of consultation that needs to be done, because there's different views on how do we get the country going. So ultimately I agree with you, that at the end, people are not concerned about decent jobs, in my view. I work a lot with people who are unemployed. They just want to get jobs. So the fact that now we're talking, obviously we mustn't exploit workers, but the idea of a minimum wage, in a country where we are growing 0.9%, 1.2 next year, NDP says to halve unemployment we need 5%. It's very concerning for me, and hence these policy paralysis that I see.
I want to stay on the point of jobs and come to you, Stephen, because when there was mention of jobs, it was generally around going leaner, in particular in the public sector, and no administrative or filing positions apparently being available, and also central authorization, I think, of provincial positions. Again, one would think that investors would look at this and say a leaner public sector would be good news, but is it lean enough?
Yeah, so look, we've got an extremely bloated public sector. So civil servants today make up 1.3 million people, and it accounts for about 40% of government expenditure. So it's a huge reality. It's easy to get bamboozled by the numbers that were thrown around today. But I can't help but feel that we're not really being honest with ourselves in terms of the extent of the problem. So Frank made mention of growth. We at MMI, our view is 0.7% this year, and we don't believe it's going to exceed 1.5% for a number of years to come. And if you look at that sort of environment, and that as an environment for raising taxes, I really don't think there's going to be a lot of tax revenue coming forward, or new tax coming on stream, bar the amnesty, which obviously will help, but probably not to the extent that they hope. And you wonder if the civil servants don't shrink as a percentage of government expenditure, how this will be funded.
But then you raise an important question now around tax, and again you were saying during our break that even a 1% increase on VAT would have made a fundamental difference in terms of revenue coming in, and yet one would now reflect on that and say missed opportunity.
Absolutely. So just the rough numbers, if we look at Pravin's expressed desire to bring the deficit down to 3.2 this year and 2.4 next year, or 2018 rather, what that suggests is he's looking for approximately 50 billion rand, which we don't have at the moment, for 3 consecutive years. Now, if you look at VAT, a 1% increase roughly translates to 20 of the 50 that he would need to find. A 1% increase across the income bands would have given another 10. And then, just to plug the extra 20, you can look to I suppose, extract a little bit more from fuel levies, from sugar, as Adrian mentioned. Yeah. And you can look to save costs on the civil servant side. But failing those two, one wonders how they're going to hit the 50 billion target.
If I could just make this point, that there was a marginal tax increase that was announced today, or not announced today. And that comes in the form of fiscal drag. It is a very effective hidden way of dragging people into higher tax brackets, that if your and my salary just keep pace with inflation, there are parts of our salary or all of our salary that get dragged up into higher tax rates. So you keep the tax rate exactly the same, but more and more people or more and more money gets into that band. Right. And as a result, you get bigger tax collections. So there was a tax increase for South Africans today. It just wasn't announced.
An unannounced tax, but here's something else that seems to not have been announced. We seem to have quite a lot of, we're not ready yet to give you the details. The NHI was one of those. The Davies Committee, still waiting for outcome on that in terms of how are we going to deal with wealth tax. What kind of message does this send? We come across as we're working collaboratively as government, but I don't get the sense that we're getting the things done in time if the finance minister can't tell us what these developments are.
This is getting any types of agreements, legislation, regulation through through government and then signed into law is never. This is not an overnight thing. So you should expect, this is the paper form of Medupi and Kusile. They will take much longer than you expect, and that's exactly what they're doing. They're taking their good, sweet time, and Frank made reference to no sooner did we have something that seemed to be tabled and agreed, and there we were, and it's like, well, hang on now, it'll be deferred for another 2 years. This is the nature of the beast.
So I'm out of time, so I would like to give each person 2 seconds just to tell me what you think the headlines are going to be in tomorrow's papers. Quick and sharp, Frank.
I think for me, without a doubt, the headline I see is here comes the ratings downgrade.
Here comes the ratings downgrade.
Yeah, so I think the big question that people, so South Africans, will reflect on this evening is whether enough was done to avoid a downgrade. And by that measure, I think the paper headlines tomorrow is going to be a step closer to junk.
A step closer to junk. You guys should change your day jobs. Adrian, that's a difficult one to follow.
So this will be really, really corny. We kicked the can down the road 6 months with the ratings agency with a fizzy drink inside of the can.
Well, I couldn't have said it better myself. The headlines, the papers, there you have your headlines. And of course, administrators and those filing positions that are waiting to be filled. Guys, these gentlemen don't need those positions. They can take up the new places in the media space. A very big thank you to Adrian Saville. A big thank you to Stephen Schultz. And a big thank you to Frank Magwegwe for joining me on Budget 2016 Reaction from the Markets. We come back to you in a moment with reaction from the business community. Don't go away. Thank you.